Learn this and you'll finally be able to trade with confidence and spot the trades that you actually want to trade. Today I'll show you what a BOS and a CHOCH is and looks like. So you can finally get your entry correct and learn to read the direction of the market. Now, what is a BOS and what is a CHOCH? You probably have seen it on the charts before. Let's explain exactly what it is so you get clarity about it. First of all, what does it stand for? A BOS stands for break of structure. That is a continuation placement. That means it's a confirmation that the market is headed in a certain direction. A change in character, or a CHOCH, it stands for change in character. This is a signal that the market has a potential shift in structure. That means that the market is actually heading back in the reversal pattern. Why does it matter that we actually know this? If you want to read the market correctly, the structure of the market will finally make sense. And you will stop trading unnecessary trades. And you will stop entering unnecessary entries. You will actually start seeing the direction of the market and knowing why the market comes back to certain points and move in certain directions. Remember this before we continue. A BOS, or a break of structure, and a change in character are not entries. They are the context before we get an entry model. They are the direction of the market. It is showing you its hand where the market is headed to. How do we spot a break of structure? First of all, you need to know and identify on a higher time frame where the higher highs are and the higher lows are. Or if we are in a downtrend, we need to know where the lower highs and the lower lows are. So go to a 4-hour or a 1-hour time frame and put those out. This will give you a clear direction for where the market is going right now. It's necessary that we use the higher time frames so that we have a clear direction where the liquidity is and where the market is drawn to. The market is always drawn to liquidity and we need to know where they are. Third step, we drop into a 15-minute. We have patience until we see a clear move into the direction of where the market is headed. If we see that the market was in an uptrend in a higher time frame and we see a shift in structure in that direction of where the market is headed, that means that we had a break of structure on a lower time frame. So we need a break of an internal high or an internal low if we are trading in a downtrend. Label that then as a break of structure. Now, let me show you on a chart exactly how this looks in hindsight first, and afterwards, by the end, we will go over the chart itself and show it. Here, you can see two charts. We see the black line or the 4-hour chart, and then inside I draw a 15-minute charts too. Those are the green lines here. It's important that you know why you need to know this. First of all, the higher time frame is the direction of the market. So the 4-hour made a higher high, a higher low, a higher high, and a higher low. Now inside those time frames, that means that we have a direction. Internal, if we zoom in to a 15-minute, we will see that inside those 4 hours we have shifts of structure in the direction of those highs. A break of structure means we broken an internal high and then the market continues to that direction. Again, we broken an internal high, we have a return then, and then we break again that internal high. As long as we are moving that direction, the market is headed to liquidity. How do we know where the liquidity is? If we had, say, that this was our previous high, we made a BOS right here to the upside. So we have a break of structure, so the market is headed towards liquidity, and that would be a higher time frame break of structure to see that the market is headed that way. Then you know that this should be the place where the market is headed to. So we had a higher time frame, break of structure, and we see that the market was trending to the upside. So an internal break of structure showing us the direction that the market is continuing higher. How to spot a change in character? Identify again a higher highs and higher lows on a higher time frame. You can choose the 1 hour or the 4 hour as your direction, and the 15 minutes is where the market is then headed to. So we drop into a 15 minutes and we actually have patience until we have a clear move in the opposite direction of the higher time frames move. Then we look for a break of an internal high or an internal low, and we label it as a change in character. It's that simple. Again, we have our higher time frame. We had a break of structure. Same from if we came from here. We had a BOS to the upside right here. So when do we see that we have a change in character? We actually have a change in character internally once we make a new lower high in an internal movement. So once we broke this low right here, we made a new lower low. At that point, then we made a lower high, a lower low again, and so on. On the higher time frames, we are still bullish. In a lower time frame, because we made a change in character and retested that movement, we saw that the market shifted structure and actually went down to a lower place. Where the market is headed to, that's for another movie. Today, I'm just explaining exactly what a change in character is. If you can get this concept and see, once we broken an internal low right here, that we had a change in character, thus the market is shifted direction to the downside. If you understand that concept, you actually are able now to read the market. The same movement is to the upside. So once we came and we made a new higher low on a higher time frame, once the market shifted back and broke an internal high right here, we had a change in character to the upside. The second one right here is not a change in character anymore. That is a break of structure again to the upside. So first we have a change in character. That means that we are moving in a different direction if we have confirmation. And that afterwards, the second one is a break of structure to the downside, and in the opposite way, we have a change in character to the upside. Once we've broken an internal high, we created a new high. We made a higher low. The second one that breaks again the high is a break of structure, because this is that continuation. The change in character shows you that the market has a potential in shifting direction. Rewatch this multiple times. There's a lot of information in here that you actually need to understand the context of the market. There are a few important things that we do have to tell. First of all, a BOS and a CHOCH are signs. They are no entries. They gave context before an entry. So this is the market showing you it's a hand where the market is headed to. It is not an entry model itself. Always use the higher time frames. Without the higher time frame showing a direction where the market is headed, or are we in an uptrend or a downtrend, we need to know this. That way you will be able to see when the market shifts it on a lower time frame, or is it still continuing to a higher time. Not every break counts. What do I mean by that? I don't want to see wicks. So if we have like a wick out, it doesn't count. We need a full candle body. We need a strong displacement. That means we need actually a very strong candle moving. So we need displacement. We need a big candle that shows you the direction is continuing or we are heading to another direction. Wicks don't count. I prefer a clean beyond an internal high or low. So we need a clean movement over those previous highs and or lows. A BOS is a continuation. It confirms that the direction where the market is headed is still going to that direction. So on a higher time frame, if we are moving from in a bullish trend, we make higher highs, higher lows. If we have continuations that shows us that we are heading to make on a higher time frame a new break of structure. So you know that that would be the direction that the market is headed. If you have a shifting direction and you have a changing character on a lower time frame, that could also mean that we have a potential reversal on a higher time frame. When and how that happens on a higher time frame, that we'll see on a different level. Now, let's go to the chart and spot them actually in a real chart. Okay, so let's go into a higher time frame and spot actually immediately where the higher highs are and the higher lows, so that you actually know what the context is of the market. So we can see that this market is in a bullish trend, so we're moving any upwards movement, so we know that we are creating higher highs and higher lows. So we should say that this is higher low. If we read the full market condition, so this is a higher high. What do we see then? We create a higher low. We create again on this one a higher high. This is a 4-hour trend movement, so we know what the direction is. So immediately, once we know where the market is headed, we can draw already. Right here, now we had a break of structure to the top side. Again here too, once we broke this high, we create a new break of structure to the upside. And once we break this high, we should create a new break of structure to the upside. But this is immediately a good sign that we can see this is a wick, no body, no displacement. That means this is not yet a new higher high. Now let's jump into a 15-minute, once we know this, how to actually spot what you should be doing. So we know now that the market is first of all going to the upside. So once we created this low, where do we have our first change in character and where do we find our break of structure? So this was the last move down. I want to see a clear break above this structure, and this would be a change in character to the top side. Because we have here an internal high that just got broken. So this is a new shift to the upside. And we can see it's with displacement. The candle had a lot of force. We have a movement downwards. And then here we create a break of structure to the upside. Now, if we know that the market is moving to the upside, we know on a higher time frame that it wants to do what? It needs to create a new break of structure. So this is where the market is headed to. So as long as we don't hit to that high, we are creating slowly new break of structures. So this is the break. Once we have a retest, we moved up. This is a break of structure too. Here we have a clear indication of a changing character. So this was an internal low right here that we broke with force and displacement. So this is a full changing character to the downside. And then here we have a continuation movement to the downside. So that means that we have a BOS to the downside. And once we break this high, we actually have a changing character back to the upside. After we broken that wicks high, we have a new break of structure to the upside. Now, this is how you actually spot changing characters and break-off structures. Now you can finally read the market like you should. We have a clear movement of the market. You have just learned what a break-off structure is and a changing character is. You no longer have to just jump into trades anymore because you now can clearly read the market. In the next episode, I'll show you why I use a 15 minutes as my decision time frame. Go watch it now.